And if tomorrow is going to be more digital than today, we will use blockchain rails for proof, for social proof, consensus proof of value, of transferring assets, of holding assets. Everything in a digital world is going to require blockchain rails. It'll be equity markets, bond markets, currency markets. It'll be art. It'll be tickets. It'll be anything, any contract is better on the blockchain because you don't need a trusted third party because the consensus mechanism allows everybody to trust it. So over time, the adoption of Bitcoin is huge. In fact, it's still growing at twice the speed of the internet.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. Raoul Pal, the CEO of Real Vision, has released a number of bullish predictions for the cryptocurrency industry, forecasting a sharp increase in the price of Bitcoin. By the end of this year, Bitcoin might surpass $100,000, and by March 2025, it might reach $150,000 or more, according to Pal. However, there can be some short-term corrections associated with this explosive gain. He believes the market will decline to the $80,000, $100,000 area before reviving. Pal's forecasts are not limited to Bitcoin. He thinks Solana might go better this year than Bitcoin, possibly closing at a whopping $400. It has an advantage over many rivals thanks to its effective blockchain, cheap transaction fees, and expanding use in DeFi and NFTs. Ethereum is anticipated to maintain its position as the top option for institutional investors in the meantime. Pal cites Ethereum's strong ecosystem and broad acceptance as the main reasons for its supremacy in the decentralized banking market. Pal highlights how institutional investors are increasingly influencing the Bitcoin market. The price of Bitcoin may fluctuate as institutions rebalance their holdings around year-end. Nonetheless, this upheaval could be a sign of a major recovery. Important contributors to this optimistic trend are the growing crypto-industrial complex, which consists of mining companies and blockchain-focused stocks, as well as the growing use of Bitcoin ETFs. Pal suggests a methodical strategy for those hoping to profit from this changing economy. He suggests purchasing when the market is weak, which is frequently when sentiment is low and liquidity is limited. Despite its difficulties, this contrarian approach can result in significant long-term profits. Pal has even higher goals for the cryptocurrency sector in the long run. According to his projections, the industry's market capitalization is expected to increase from over $3 trillion to $12 trillion by 2025, and it may reach $50, $100 trillion by 2030. These numbers highlight the revolutionary potential of cryptocurrencies, which presents investors with a generational chance, and lots of things Raoul Pal discusses, so please watch the video to end. And like, share this video, and subscribe our channel Everyday Finance. Thanks.
By doing nothing, you just compound the returns over time. I like to add to my bags into the big cyclical sell-offs, that once every 4-year down cycle. I like to add, and then your holdings compound, and you make more and more money each time. But just have a longer-term time horizon. For sure, look at the hourly charts. It's fun. I've got them up all of the time, but I don't trade them. I just hold. I barely do anything. I make a couple of asset allocation switches in the entire cycle, and that's it. And magic happens, and it stops you fucking up. So try your absolute best not to do anything with your main holdings. Also, zoom out. This space is all about noise. It's called FUD, fear, uncertainty, and doubt. You'll find that somebody somewhere is trying to scare you, telling you it's a scam, telling you it's going to collapse, telling you something is going to happen, the Chinese are going to do something, the Russians are going to do something, something's going to go to war. All of these things are going to come across your screens every day, and they will make you feel insecure. Remember, this is noise. This is an adoption of technology. And if tomorrow is going to be more digital than today, we will use blockchain rails for proof, for social proof, consensus proof of value, of transferring assets, of holding assets. Everything in a digital world is going to require blockchain rails. It'll be equity markets, bond markets, currency markets. It'll be art. It'll be tickets. It'll be anything, any contract is better on the blockchain because you don't need a trusted third party because the consensus mechanism allows everybody to trust it. So over time, the adoption of Bitcoin is huge. In fact, it's still growing at twice the speed of the internet. Back when the internet was in its early days. So something that grows at that speed also goes up in price. So zoom out, remove the noise. If tomorrow is not going to be more digital than today, then start worrying. You can also worry at some point about the big cycles. So 2026 is likely to be a down year. Will that happen? I don't know. Most likely. Now, you can either hold on through the down years and keep adding and increasing the value of your portfolio, or you can unload some risk. And we'll talk about some of that. Don't forget, en route, make sure you take some lifestyle chips off as well. This is a really important concept. I've got another video on this, but lifestyle chips are the ability to take off some profits in things that really matter to you. So if the markets turn around, you don't time the top properly or whatever you're trying to do.
Michael Saylor, chairman of MicroStrategy and a proponent of Bitcoin, is scheduled to present a brief 3-minute proposal to the board of directors at Microsoft regarding the incorporation of Bitcoin into their corporate treasury strategy. This initiative was led by activists and supported by the National Center for Public Policy Research, NCPPR, with the objective of emphasizing Bitcoin's potential as a strategic asset. Saylor, during a November 19th X Spaces session organized by Vanek, indicated that he had initially suggested a private meeting with Microsoft CEO Satya Nadella, which was not accepted. Nonetheless, the forthcoming presentation aligns with a shareholder vote set for December 10th, during which Microsoft will determine the viability of Bitcoin as an investable asset. Saylor's argument highlights the contrast between MicroStrategy's focus on Bitcoin and Microsoft's conventional strategy. MicroStrategy, although significantly smaller than Microsoft, has seen its share price exceed that of the tech giant by more than 300% this year. Saylor argues that Bitcoin has the potential to reshape Microsoft's financial framework by lessening its reliance on earnings-based valuation metrics. At present, 98.5% of Microsoft's enterprise value is contingent upon quarterly earnings, while a mere 1.5% is associated with tangible assets. By diversifying into Bitcoin, a limited inflation-resistant asset, Saylor posits that Microsoft could enhance its financial stability and deliver increased long-term shareholder value. He applied this rationale to other financially robust corporations such as Apple, Google, Meta, and Berkshire Hathaway, recommending that they evaluate Bitcoin as a strategy to mitigate inflation risks and enhance their cash reserves. The board of Microsoft has advised shareholders to vote against the proposal, referencing its current assessment of a range of diverse investable assets, which includes Bitcoin. Nonetheless, Ethan Peck from NCPPR cautioned that an outright rejection of the proposal might put Microsoft in a vulnerable situation, particularly as the pace of institutional Bitcoin adoption continues to increase. Saylor's argument illustrates prevailing trends in corporate finance, highlighting Bitcoin's growing perception as a strategic reserve asset. For corporations such as Microsoft, the integration of Bitcoin may serve to reduce risks linked to cash devaluation, while simultaneously presenting opportunities for growth in an increasingly digital financial environment. Microsoft's cautious approach is consistent with its risk-averse investment strategy. However, the increasing trend of institutional Bitcoin adoption creates a persuasive argument. If successful, Saylor's advocacy could represent a significant turning point for Bitcoin's incorporation into corporate treasuries, indicating a transformation in corporate strategies regarding liquidity management and asset diversification. The upcoming December vote is poised to act as a critical indicator of the tech giant's willingness to explore alternative financial strategies. The potential actions of Microsoft underscore the growing significance of Bitcoin within contemporary corporate finance discussions. Let's back to the Raoul Pal interview.
You've paid off a mortgage, or you bought the car, or you bought the holiday. You've done whatever it is that you need for your own life. And you're going to hate selling out when you have to take some lifestyle chips off. But at the end of it, your future self will thank you massively. So make sure you think about that. The time for lifestyle chips are somewhere between December and March. We will obviously get more volatility in the space. Expect 30% pullbacks frequently, maybe 35%. These will happen. Maybe Bitcoin goes to 100,000 and then pulls back to 70,000 and goes up. Don't freak out about it. It's really normal. But remember to take some lifestyle chips off at some point. Then you're just going to have this sense of security that you can run the trade longer. You can't just leave it all in and hope that you get it right. So again, I'm trying to save you from yourselves here. And the other thing is buy the fucking dip if you can. So if it does sell off 35%, you've got a bit of extra cash, buy it if it's not the end of the cycle. If it is the end of the cycle, then you wait till it goes down 70% or so, and then you pile in as much of your savings as you can on top of your existing holdings and let the magic compound over time. Let me tell you a little bit about that, because I've learned that the hard way. So the mistake there was I bought Bitcoin at $200 back in 2013. Amazing. I then rode it all the way down 85% because I knew it was a long-term bet. It then went back up in 2017 and it was trading about $2,000. And there was some FUD, the forking of Bitcoin into two different Bitcoin blockchains. And I was like, I don't really understand what's going on. And so I sold out. So it was the FUD that got me. And I then had sold out. But I was pleased. I'd made 10 times my money. Great trade. I thought, I'd done it well. It then went up another 10x in the last 5 months of the year, which was unbelievable. I've never seen anything like it. I missed that, but I was fine because I'd taken money off the table. I'd taken my lifestyle chips out. So I felt pretty comfortable. The market then falls all the way until 2019. So that was the down year of 2018. And 2019, I started looking at it again. And really in 2020, during the pandemic, when it fell 50%, is when I got back in. I think I averaged in about 6,500, and I'm still long to this day. Okay, so that looks pretty good. I bought it cheap. I sold it expensive. I bought it back cheap. But when I looked at it, and I bought a lot more at the end, the second time around in 2020, when I go back and look at, if I just held my original bet, which was much smaller, I'd have made 5 times the money from trading it. You see, that's the issue here. Now, had I listened to myself and bought the big sell-offs?
MicroStrategy, guided by Michael Saylor, has reinforced its status as the foremost corporate holder of Bitcoin. Recent data indicates that the company currently possesses 331,200 BTC, with a valuation exceeding $3.3 billion, after executing a substantial acquisition of Bitcoin, amounting to $4.6 billion on November 18th. The total acquisition for 2023 stands at 142,500 BTC, with an average purchase price recorded at $39,219 per Bitcoin. The assertive Bitcoin strategy implemented by MicroStrategy has yielded substantial returns. The company's Bitcoin assets have increased by 133%, indicating a strong return on investment. The share price reached an unprecedented closing high of $374.80 on November 18th, although it experienced a minor after-hours dip of 0.7%. In order to support its aggressive Bitcoin acquisition strategy, MicroStrategy has unveiled its 21-21 strategy, which aims to secure $42 billion in funding over the next 3 years. This strategy entails securing $21 billion in equity alongside an additional $21 billion via fixed income instruments. The objective is well defined: to persist in augmenting its Bitcoin holdings and enhance the correlation between its corporate valuation and Bitcoin's market performance. The value proposition of MicroStrategy is significantly influenced by Bitcoin. Currently, Bitcoin is priced at $91,500, reflecting a slight 2% decrease from its peak value of $93,471, which was achieved on November 13th. The increasing institutional adoption of cryptocurrency and its robustness as a store of value are pivotal elements influencing Bitcoin's price trajectory and MicroStrategy's strategic alignment. MicroStrategy's bold position on Bitcoin demonstrates an innovative strategy in corporate treasury management. By reallocating cash reserves into Bitcoin, the firm has strategically positioned itself to capitalize on the potential for substantial long-term price appreciation and the inherent value derived from scarcity. Nonetheless, this approach subjects the organization to increased volatility, given that its balance sheet is more closely linked to Bitcoin's performance. The effectiveness of the 21-21 strategy is contingent upon prevailing market conditions and the overall investor sentiment regarding Bitcoin. The current surge in institutional interest in Bitcoin presents a unique opportunity, as MicroStrategy's strategic investment could potentially generate significant returns. However, this scenario also highlights the inherent risks associated with such a high-stakes investment strategy. In a wider perspective, MicroStrategy's actions may prompt other companies to reassess their treasury strategies, potentially enhancing Bitcoin's significance in institutional investment portfolios. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.